Hello, welcome to all in your SP secretarial practice class for the 12th standard. Now today we are going to start the new lesson number 2, lesson number 1, introduction of the corporate finance. We have already completed. Now today we are going to start the new lesson. Lesson number 2 is based on the sources of corporate finance. Lesson number 1 was based on the introduction of the corporate finance. Now the lesson number 2, different heading with the different meaning sources of the corporate finance. This picture has taken from your textbooks starting page of the lesson number 2. As you can see that here is a heading, sources of the owned capital. It includes shares and retained earning. Second heading, sources of the borrowed capital. It includes debentures, acceptance of deposits, bonds, ADR and GDR, commercial bank, financial institution, trade credit, and the last one, distinction between the different terms. Before going to start these sources, we must be aware about the introduction. First of all, finance, you already aware about the finance meaning, money management means. Finance is a necessary for all business. Every types of business require the finance. No business can be continued without finance. Finance necessary for what? For promotion, for organization, and to manage the day-to-day activity. So overall on, you can say that the business activity depends on finance. The business activity depends on money management. The business activity depends on funds. So without the fund, without the finance, no business can be survived. So finance create what? Capital formation. When you are making your financial planning, so you have to think about your capital formation. How you can create your capital formation? It's a process of collection of capital from various sources according to the financial plan. So your planning should be according to the collection of sources. So which type of sources we will discuss in the next slide. A joint stock company, you already learned so many things about the joint stock company in your 11th standard. You already know that joint stock company require which type of capital? Huge capital, funds through different sources. These various sources of finance available to business may be explained with the following chart. We are going to explain these sources through the chart. So you already know a joint stock company collects huge funds through different sources. So this is your chart. Sources of finance based on the type of the capital, based on the available sources. So you can categorize your capital according to the different terms. So here we are taking the type of the capital with the sources. You can see that the main heading on capital and borrowed capital. On capital or on capital, borrowed capital, that means the capital which can be borrowed from the outsider. On capital, what it includes? It includes shares, it includes retained earning. What do you mean by the share? Share means a smallest units of the capital. Company's capital divided into the shares, and all the smallest units called as the share capital. Retained earning. Retained earning, you can say that it is the profit saved by the owner, saved by the shareholder, saved by the management to utilize that fund in the future requirement. That means whatever you earn from the business, you never distributed whole the amount to the shareholder. A part of the amount given to the shareholder as a dividend and remaining amount keep for the future requirement. So that amount, whatever you hold from your profit, that is called as the retained earning. Shares is also divided into two parts, equity shares and preference shares. We will learn these things also in the detail in the next slide. Borrowed capital. Borrowed capital, what it includes? Through the debenture, you can collect your borrowed capital. Public deposits, bonds, ADR and GDR, banks, financial institutions, trade credit. The above sources of the finance may be external or internal. You can categorize your sources according to the type of capital which is given in your flowchart, or maybe you can describe your sources of the finance according to the internal and external. This one is your external capital and this one is your internal capital of sources. So external sources means when capital is raised from the outsiders, that means borrowed capital. Internal source means when capital is made available from within the organization, that is your own capital. Now go to the next slide. So first of all, before explaining the key term, we must be aware what do you mean by the own capital. The capital raised by the company with the help of the owner. What I said in the previous video, owner capital means own capital means owner capital is called the own capital or ownership capital. The shareholder purchase shares of the company and supply necessary capital. It is one form of the own capital. So as a shareholder, after buying and selling of the share, you can be a part of the own capital, and that amount can be utilized for the own funding. Another source of own capital. Another form of own capital is retained earning. What I explained in the flowchart, own capital means shares and retained earning. So retained earning is the part of the internal source of the financing. It is also known as ploughing back of the profit. That means जो profit दोबारा से reinvested कर सकते हैं. It is reinvested of the profit in the business by the company itself. Retained earning is an internal source of financing, right? True. Own capital is regarded as the permanent capital as it is written only at the time of the winding up of the company. तो आपकी जो ऑन कैपिटल है वो कैसी है, परमानेंट कैपिटल है, एंड इट कैन बी रिटर्न, इट कैन बी रिफंड ओनली एट द टाइम ऑफ द वाइंडिंग अप ऑफ द कंपनी, नॉट बिफोर दैट. So how you will decide your own capital requirement? Promoters. Promoter decide the share capital requirement by the company. Decided by the promoter. Promoter, that means the initiator who take the decision to start up the business. This amount of share capital is known as the authorized capital. Authorized capital, that means the capital amount, the capital which is given in your memorandum, that is called the authorized capital. It is stated in the capital clause of the memorandum of association of the company. Memorandum of association means one of the most important primary documents when you start up, when you establish your business, you have to create the documentation. So memorandum में जो आपकी capital clause होगा, that is called the authorized capital. So let us learn in detail the various sources of the own capital. So first question comes into our mind from the flow chart. What is share? Share is a unit by which the share capital is divided. Shares capital जब आपकी small unit में divide होगी, that is called the share. The total capital of the company is divided into the small parts, and each part is called share, and the value of the each part share unit is known as the face value. शेयर क्या है आपका, स्मॉल यूनिट, स्मॉलेस्ट यूनिट्स ऑफ द कैपिटल इज कॉल्ड द शेयर. दैट मीन्स योर कंपनी शेयर कैपिटल इज डिवाइडेड इनटू द शेयर्स. द वैल्यू ऑफ द शेयर इज कॉल्ड एज द फेस वैल्यू. Share is the smallest unit of the capital of the company. It facilitates the public to subscribe to the capital in a smaller amount. Why we divided our capital into the shares? Reason is that whole the amount cannot be invested by the one person. So to start the investment to motivate the external person to invest in your company, you have to sell it out your share. So share is a smallest unit and it is a part of the share capital. Now we have a different heading, feature of the shares. Shares होते कैसे हैं? So first of all, meaning. All the things I have taken from your textbook, so you people will ever the topic one by one through the syllabus. Meaning, share is a smallest unit in the total share capital of the company, which I already explained you. Smallest units होता है, right? Second, ownership. The owner of the share is called as the shareholder. It shows the ownership of the shareholder in the company. तो ownership इसकी रहेगी, shareholder की रहेगी, और shareholder कैसे बनेंगे आप? After buying the share. Unless dematerialized, each share has distinct number for identification. As you know that shares is not for one unit. Distinctive number means each share has a distinct number for the identification. It is mentioned in the share certificate. That means every share consists a separate number, consists a proper number so that you can identify your share. And it is mentioned, distinctive number mentioned in your share certificate. Evidence of title. A share certificate is issued by the company under its common seal. Whenever companies sell it out their shares, they provide the share certificate to their shareholder and it is signed by the common seal. It is a document of the title of the ownership of the share. This is a share certificate is a document of which type of document? Title of ownership. That means after buying the share, you will get the ownership in the company. A share is not any visible thing. Shares कैसा है? आपको टच करने के लिए नहीं होता, फिजिकल वे में नहीं होता. You cannot see that. It is a shown by share certificate or in the form of the demat shares. That means this is just a numbering. You can transfer your shares from one person to another person. You get the share certificate, but there is no physical existence. Value of shares. Each shares has a value expressed in terms of money. So how you will calculate the amount of the shares? So there must be an expressed value. So expressed value can be calculated through the face value, issue value and the market value. What do you mean by the face value? The value which is written on the share certificate and mentioned in the memorandum of association. That means when you start up your business, when you take the registration of the company, that time you have to make your memorandum of association. So the share amount, the share value which is given, which is written in the share certificate and the memorandum, that is called the face value. Issue value. It is the price at which company sell its shares. ये कैसा प्राइस है जब अपनी कंपनी आपका शेयर सेल करती है, that is called the issue value. It is decided by the company. Market value. This value of share is determined by the demand and supply force in the share market. So your market value of the shares may be affected through the demand and supply. If there will be a more demand, that means your share value will be more. If your demand will be less, then your share value will be less. So there are the three terms which can be used to calculate the share value in the terms of money. Now another feature, right. A share certificate holder get the right such as to receive dividend, right to inspect statutory books, right to attend shareholder meeting and right to vote as such meeting. That means after buying the share, what is your rights as a shareholder? So as a share confers certain rights on its shareholders, such as right to receive dividend, statutory books, and attend the shareholder meeting. You have a right to give the votes for the matter of the company. Income. A shareholder is entitled to get a share in the profit of the company. It is called as the dividend. Company में आपकी income कैसे होगी as a shareholder? How you will get your income? So being a shareholder, you will get the profit, and profit will be given to the shareholder. That is called the dividend. Next heading is freeability. The shares of public limited company are freely transferable in the manner provided in the article of association. That means shares is a property of the transferable, and the shares can be sell it out from one person to another person. The ownership can be changed after selling the share. Next feature, प्रॉपर्टी ऑफ द शेयर होल्डर. तो शेयर कैसी प्रॉपर्टी है? मूवेबल प्रॉपर्टी है. फ्रॉम वन पर्सन टू अनदर पर्सन. आफ्टर सेलिंग द शेयर, another person will become the owner automatically. The last one, features kind of shares. A company can issue two kinds of the share. First one is equity share and second one is preference share, which we have already discussed in the flow chart. तो शेयर्स के बारे में हम लोग पढ़ेंगे इन द नेक्स्ट स्लाइड. इक्विटी शेयर्स एंड प्रेफरेंस शेयर. A company can issue different type of the share depend upon right to control, income and raise, and the following charts show different kinds of the share. So students, today what we have learned the meaning of the sources of the finance, where we discuss on capital, we learn about the meaning of the share, and we learn about the feature of the share. So remaining topic related to the borrowed capital, related to the banks, financial institution, related to deeply information about the equity share and the preferred share, we will continue in the next slide. Thank you for watching the video.